Becker, I have been a long-time supporter of Tesla. The shares, in my opinion, are undervalued. It takes a special combination of creativity, perseverance, and patience, possibly most importantly, to own Tesla stock. Even with its volatility, the company is still likely to be a great long-term investment, so only investors with a long-time horizon will likely be able to weather this years-long roller coaster together. Although sales and delivery figures for Tesla have not been steady, there will undoubtedly have been some very interesting developments, and the automaker will continue to grow steadily. Based on how many cars it can deliver, a number of investors and analysts are projecting Tesla's future. Once more, analysts are beginning to project Tesla's delivery power for the year. Discover why some of the top analysts in the business have given Tesla stock a strong buy recommendation. Hi everyone, happy to be back at Tesla tomorrow. Tesla recently reported record-breaking quarterly car deliveries, but despite pricing, quarter-over-quarter sales growth was only moderate. Slice's rising competition and oblique economic output in late 2022 caused the automaker's prices for some of its cars to rise in several of its markets. Model T cut prices for its automobiles worldwide, including Model 3 and Model Y cars in Australia, Germany, France by allowing more people to buy cars. The Netherlands, Norway, Switzerland, and the United Kingdom saw a decrease in their respective prices. The global switch to sustainable energy was sped up by Tesla. As per Grace Tao, Tesla's vice president for external relations in China, the company has raised prices multiple times in the last few years. Tesla's price cuts are backed by innumerable engineering innovations. She stated that the company is responding to the country's coal with practical actions to promote economic development and release the potential of domestic demand. Although many expected that these price cuts would draw enormous demand for Tesla, that does seem to be the case, as some analyses claim the price cuts did not yield expected results. Why have they said this? Let's find out, but before we get into it, if you like this content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla delivered 422,875 vehicles for the first 3 months of this year, up 4% from the previous quarter. This was 36% higher than it was a year ago, according to Refinitiv data based on several analyses. The first quarter deliveries compare with analysis expectations of 430,008 vehicles. Other data shows that Wall Street was expecting Tesla to report deliveries of around 432,000 vehicles for the quarter. Tesla bull Gary Black said Tesla disclosed that a consensus of more than 20 analyses called for 421,500 vehicles delivered. Tesla missed the figure analysis survey by Refinitiv and other estimates, which showed Tesla beat Wall Street expectations with its 422,875 vehicles delivered. Tesla delivered 6% more of its mainstay Model 3 and Model Y vehicles in the first month of this year than the previous quarter, resulting in a higher number of deliveries for its higher price. Model X and Model S vehicles slumped by 38%. The carmaker produced more cars than it delivered, manufacturing 440,808 vehicles for the first 3 months of this year. Music Tesla also ramped up production at new factories in Texas and Berlin, and as China's production recovered from a lockdown, the car company recently tweeted that its Texas factory built 4,000 Model Ys in 1 week. Similarly, it also said in late February that its German plant was producing 4,000 cars per week. Fred analyst Garrett Nelson recently upgraded Tesla stock to a strong buy rating. The analysis also increased the firm's target price from $250 to $275, despite the supposed deliveries. Missed by Tesla, Nelson still maintained both the rating and price target for Tesla stock. The analysis stated that Tesla's story has a lot going for it, and so he reiterates this with a strong buy rating, and he also added that while he considers the release a mild disappointment, any negative stock price reaction will likely be muted by news of the OPEC surprise output cut, which caused oil prices to jump and is considered bullish for EV sales. On the other hand, Citigroup analyst McKelly also said that he expects a slight pullback in Tesla stock after its delivery report. He told investors that the growing spread between production and deliveries will likely maintain focus on more price codes in Q2. The Citigroup analysis also added that Tesla shares could retreat slightly with Q1 and market share, followed by Volkswagen. Tesla reported its fourth quarter earnings on January 25, 2023, beating both earnings and revenue. The car company reported automated revenue of $21.3 billion in a quarter, representing 33% growth year over year. Tesla's solid quarter is the latest sign that it's done an outstanding job with navigating through global supply chain and logistics challenges and weathering the storm better than most legacy automakers. As of today, Tesla has delivered over 4 million vehicles. However, there's no doubt that the carmaker faces several near-term headwinds, including persistently high inflation, a looming economic slowdown, as well as the ongoing global chip shortage and various supply chain issues beg the question. Will this year be better for Tesla while other automakers deliver their worst sales figures in a decade? Tesla's delivery statistics were praiseworthy. In 2022, the company delivered 1,331,851 vehicles to customers worldwide, and by doing so, it increased its deliveries by 40 in comparison to the previous year. It also produced 47 more cars in 2022 compared to 2021. In 2022, Tesla expanded its international factories, and by March, the first Tesla vehicles were produced in Germany at the newly opened Giga Berlin. Tesla CEO Elon Musk plans to make Giga Berlin into a European jewel. The factory in China was also updated to manufacture as many as 750,000 Model 3 and Model Y electric cars annually during 2022. Tesla installed the capacity across all of its factories to produce 100,000 Model S and X vehicles per year, together with 1.8 million Model Y and Model 3 vehicles. Gene Munster said earlier this year that Tesla stock has more downside ahead and investors should brace for as much as a 25% drop in future earnings amid recent price codes. According to him, while he is a long-term believer in Tesla and thinks that the shares are undervalued, they'll still be cautious in the near term. He thinks that there's going to be some earnings pressure based on some of the discounting that has happened, speaking of Tesla's price cuts. Gene Munster said that if Tesla didn't have the price cuts, it would have been pretty ugly. And while Tesla's delivery rate showed an acceleration, it didn't accelerate to the level Musk has suggested it would. Ventura's founder, however, noted that he remains positive about the company and thinks ultimately there are a few good reasons to own Tesla stock in 2023. The biggest headwind for Tesla has always been its valuation, but as the car company's surge in sales and profits has proven, a business can grow into a high venture valuation over time. At the beginning of this year, Tesla had a price-to-earnings ratio under 30, a price-to-sales ratio under 5, and a price-to-free cash flow ratio under 50. Since then, all three metrics have gone up as the stock price has risen, so while there's no denying that Tesla stock simply isn't as cheap as it was at the beginning of the year, its valuation isn't unreasonable if the company can keep growing at a breakneck pace. However, investing in Tesla stock right now may be a pretty good idea. It's important to stay modest on your investment. One of the biggest mistakes an investor can make is allocating too much attention, time, and money to one stock. The biggest is this issue right here. The bigger the position, the easier it is to make an impulsive decision when stock prices are falling with no end in sight. Therefore, the best approach for most investors could be to own a reasonable but not overly sizable position in Tesla, and then let the multi-decade investment thesis play out. Do you think investors should hold on to their Tesla shares? Let us know down below. And don't forget to tell us what your valuation on Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.